Bitcoin is my first love. It is my first baby before my actual children.
Feels like it's a really, really bad way to own Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Barry Sobert and Raoul Pal will talk about crypto's AI-driven future, Bitcoin's crypto momentum, decentralized finance breakthroughs, blockchain innovation, innovative investment strategies, and disruptive possibilities. Let's catch them up to know more. Here's what happened in crypto today.
Just want to hear kind of your foretelling of it. What happened in 2020, not just to you, but to the space? Because, you've been in the space for a long time. There's always leverage that blows up. There's always problems, but it was spectacularly big this time around.
Okay, so what happened was in COVID, money printer went burr, prices skyrocket in 21. And I think it was one of those situations where with most asset classes, a bubble formed, excess leverage was essentially, put in place all around the asset class. And there was a lot of known and unknown connectivity among the various lenders, borrowers.
Yeah, and there was one very big borrower in the middle of it all that people didn't know that they were half the borrowing.
Yes. Ultimately, I think that this was kind of like the prick that popped that kind of that credit bubble. You had the Luna depeg, which happened, I think, around May.
Yeah.
So you had a lot. There were we were not involved in Terra, Luna. We had no exposure or DCG, but there were a lot of people who did, and a lot of people who were caught off sides. And you started seeing kind of forced liquidations. You started seeing the cascading effect, deleveraging. And then where it hit us was in the middle of June. Three Arrows, which at the time was, I think, the largest hedge fund in the crypto space, missed a margin call to Genesis, the prime broker business that we owned. And they had borrowed money from a lot of people.
That's right. And nobody really knew. It was kind of like long-term capital. They were the biggest borrower on the street. And
they were. And no one, the principals, they seemed to be legitimate. They seemed to know what they were doing. And so they blew themselves up. And they took down a lot of counterparties with them. And Genesis was the largest lender in the space, the largest prime broker in the space. They were the largest OTC trading business in the space, one of the largest derivative trading businesses in the space. And so when Three Arrows imploded towards the end of June, there was Genesis had to essentially kind of file financials with regulators every quarter. And they had to treat the Three Arrows credit as like unrecoverable. There was no way to know what, like at that time, kind of what Three Arrows what they had. There was no way to know, was it a fraud? Did they have assets that are illiquid? And so Genesis had to essentially do a mark to market adjustment on their balance sheet that created an equity hole. I know a lot of companies operate with equity holes, but in the financial space, certainly in the lending space, that makes people pretty uncomfortable. So DCG, we had a choice. We could have either allowed Genesis to work through that situation on their own, or we could have stepped in and done something. And what we ended up doing was putting in place, which is essentially kind of, it's like a keep well, where we put in place an instrument where if the money that Three Arrows owed Genesis ever didn't all come in, we essentially backstopped it. We essentially would say, okay, we will take care of it. And so Genesis, was living to fight another day, and things were.
The BIS cautioned that booming crypto and DeFi adoption risks destabilizing traditional finance and widening inequality, spotlighting stablecoins as key transfer mechanisms requiring stricter reserve and redemption rules under stress. Macroeconomist Lynn Alden, speaking on April 17, still confidently forecasts a higher Bitcoin price by year-end than its current tilde $85,000 level, though she admits recent tariff shocks have muted gains. She suggests that a major liquidity unlock, perhaps via aggressive Fed easing, could trigger a fresh rally. Meanwhile, U.S. prosecutors in the Eastern District of New York announced on April 18 they will proceed with charges against former SafeMoon CEO Braden John Carney, despite a DOJ memo opposing regulation by prosecution in digital assets. Carney faces conspiracy counts of securities fraud, wire fraud, and money laundering for allegedly diverting millions in SFM tokens during 2021 to 2022. The community watches the trial closely, balancing demands for accountability with innovation.
So we own Foundry, which I talked about, which I'll come back to in a second. Then we own a company called Fortitude. So Fortitude is we're actually mining ourselves. And what's unique about Fortitude is we've developed or created the first ever venture miner where we are mining a lot of different tokens, all proof of work tokens, and looking at mining as more of like a venture play. So we're deciding which tokens to mine, which to hold, and it's a great business, and there's not a lot of miners doing it. So that's on the Fortitude side. And that business, look, it's all about being smart about what you mine. It's all about access to facilities, it's cheap energy, it's access to the equipment. On the Foundry side, so Foundry's business is very, very simple and straightforward. It runs the pool, so it has built the infrastructure that enables these U.S. miners to mine Bitcoin and secure the network, and it has site operations. And so it has a team of people that essentially stand up and run the facilities for many of the miners around the country. So think of it as, where there's a part technology, part, think of it like Schlumberger, that type of business. So we are not taking at Foundry. We're not taking any capital risk. So we're not buying machines at Foundry. We're not speculating the price of Bitcoin. We're enabling the U.S. Bitcoin industry to thrive. So for us, it's obviously it's a complicated, challenging business because it's Bitcoin, because your revenue is doing this, but we don't have to make large capital investment decisions and try to assess future hash rate or payback periods. The miners do that, but the miners they have all the upside. Like Foundry doesn't have that type of upside.
So let's talk a bit about the ugly year of 2022. So you built this huge business.
Could we forget about 22?
I'd like to. We all would, because it was fucking ugly and horrible. And I know it was really tough for you.
After surging nearly 30% from a 4-month low of $1.61 to around $2.08, XRP's rally now risks reversal. A classic inverse cup and handle pattern has emerged, with price curling into a cup and forming a handle atop neckline support near $2. Breakdown below support could unleash a 40% plunge, driving XRP toward $1.24. This bearish structure aligns with XRP's 200-day exponential moving average near $1.28, coinciding with its November peak. Veteran trader Peter Brandt has suggested market cap contraction of up to 50%, underscoring the risk of support cracks. On-chain fractals reinforce the gloomy outlook. XRP's realized price, the average cost basis for circulating tokens, sits at about $1, mirroring past cycles where sharp pullbacks return prices to this benchmark. With over 80% of addresses in profit, complacent holders may trigger profit-taking waves, amplifying downward pressure toward realized price territory, and the 200-week EMA near $0.81. Sentiment is cooling on a return to record highs above $3.55, as prediction markets assign just 35% odds to such a scenario before 2026. Flat momentum across crypto markets this April, driven partly by escalating global trade uncertainties, suggests XRP may struggle to buck the broader bearish trend and could indeed revisit its $1 realized price. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.